Yo, what's up guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a look at the Tencent music stock. It is looking extremely undervalued down at these lower price levels. So I want to jump on and give you my thoughts on where I see it going. We'll break down the fundamentals and I will give you my TME stock price prediction for the end of 2021. So let's jump right in. All right, guys, before we get started today, subscribe to the channel for me. Hit that little bell so you get notified every time I post. There's also a link down in the top pinned comment to my Patreon account. Come over and join the family. We've got an awesome community over there. You'll get access to the private Discord where we talk stocks. You can communicate with me one-on-one. You'll also get access to all of my different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock, up to the second I do it, I send it out so you can follow along. I actually think the most valuable aspect is all of the swing trade setups that I send out. So like anytime I'm mapping a chart out and I'm setting up a trade, or even when I'm breaking down fundamentals for, high conviction long-term holds, I send that out, put it on your radar so you know what I'm looking to buy. I've also got a ton of education over there, guys, in the Discord. So if you want to come over, use it to take your investing to the next level, come join us. I think you'll get a lot of value out of it. Day One Squad, I love you guys. Thank you for your support. It means the world to me. But guys, let's get started. In today's video, we're going to look at the Tencent music stock, guys. This is one of those Chinese companies that has gotten beat down really badly over the course of the last few months, just like Alibaba did. This was actually starting to sell off prior to the Communist Party of China, crackdown that happened that caused all of the Chinese stocks to, capitulate down to really low levels. But Tencent music is looking extremely undervalued down at these lower price levels. Before we get started, guys, I want to mention, I have not done a full deep dive analysis on this company and their growth story and all those different things. The goal of this video is to take a rudimentary look, a top-down analysis of the company, the fundamentals overall, to see if it's something we want to spend much more time going into on a deeper level. We want to take a look at the valuation metrics, look at how the fundamentals line up to see if there's even potential for enough upside to be a beneficial stock. So with that being said, don't jump my guns if I miss anything on the DD or anything like that. We're just looking at the fundamentals and kind of what the company does. So let's get started, guys. First thing we're going to look at, so for those of you guys that do not know, Tencent Music is a mobile music app out there in China. They definitely have the highest market penetration. I want to say it's like 90% of all of China. They've got like 4 out of the top 5 apps over there in China. They've got quite a bit of products and they're also gathering more market share as time goes on. So a very dominant company within the, the mobile music streaming in China. Guys, this company has been around for quite some time. They've made a lot of acquisitions, but these are some of the products that they offer. As you can see here, they've got online music, online karaoke, live streaming, long form audio, and online concerts. Now, guys, I don't know if those online concerts and online karaoke were just more of a product of the pandemic because it was driving everybody inside and they wanted to give their users the same opportunity to, participate in activities that were, pre-COVID without, spreading the virus. So after COVID, is that going to go away? Are people going to continue to use those? I don't know. That's something you would have to do on your, your deeper analysis, but definitely something to consider. The users are growing. More people are using them every day. So maybe they will stick around far after COVID, leaves. But the next thing we want to look at, guys, so this is a slide from their earnings report on their Q2 earnings. This is just some, bullet points on, some of the things they've accomplished or, value points about the company. As you can see here, guys, the most valuable online music and audio entertainment platform in China. Like I said, guys, they're a huge company. A lot of the times with these big companies, guys, it's almost like they get too big to fail. People kind of get that mindset. And they kind of just pay whatever price it takes. Where again, we're taking a look at it to see where it's at as far as valuation and upside. Now you can see here massive user scale, as it says right there, 832 million total mobile monthly active users. Guys, they've almost got 1 billion people using their apps. That is pretty insane. The more users, the better they are at converting them to paying users. The real key metric, like other subscription apps, is getting that average revenue per user up. So, and they are doing that. Next thing here, guys. Now this is their trailing 12 months revenue. Now that's a Chinese currency, obviously. I want to say the USD number is like 4.89 billion or something along those lines. That's what they've done in revenue. Now, as far as the actual net profit, they've got a net income margin of like 16%, which is really good. But that right there, the 5.1 billion, yen or whatever that currency is, converts to about 780,000 in USD. So they are making money. They are profitable, for their last trailing 12 months. Now, as you can see here, guys, they've got over 60 million total music tracks, so a ton of music on the platform. This is what I kind of liked right here, guys. They've got 77.2 million total paying users, and they grew that 30% year over year. Now, is that growth rate sustainable, or did they grow it, at 30% because everybody was at home doing nothing from COVID and they all wanted to listen to music, or is music just getting more popular and growing faster? Again, that's something you'll have to ask yourself. Again, here, 4 out of 5 of the top mobile apps in China. So big company, very dominant, a lot of market penetration. Next thing we'll look at, guys. So this is from their Q2 earnings report that they just reported. Now, I'm not quite sure. I think they beat on EPS, but they missed on revenue by a few percentage. You'll have to fact check me on that. But nonetheless, as far as monetization goes, you can see here, guys, they've got a 9.3% total paying ratio, but they were actually able to convert 30% year over year growth in total paying users overall. That is huge, guys. I mean, I don't know what their, monthly active users or average revenue per users is going up, year over year, but that is a metric to definitely look into. Now, as far as growth goes, as you can see here, the total revenue growth for Q2 in, Chinese currency, 8 billion. In American currency, that's about 1.3 billion in total revenue for Q2, which was 15% total revenue growth year over year. Again, nice growth there. As far as gross profit goes, guys, they've got a 30% gross profit margin. That's a really nice gross profit margin. I believe that converts to about 200,000 in gross profit in USD. You'll have to check me on that one as well. But guys, let's go ahead and jump into like the overview, valuation metrics, and income statement. This is real, where the real analysis starts. As you can see here, guys, they've got about 1.69 billion outstanding shares. As far as the market cap goes, it's currently sitting at about 12.63 billion. So a big market cap. That's definitely not a small cap company. It would be considered a medium to large, large cap company. As far as shares held by insiders, about 4%, held by institutions, about 33%. So institutions are definitely buying it. They could absolutely be seeing what we're seeing here, where the stock is looking to be much too undervalued at these lower levels. As far as PE ratio, guys, looks like they got about a 20 on their PE. So PE is right about in line with a growth stock, 15 to 20 PE. Nothing too impressive there. Price to sales ratio 2.5, not horrible. You want that as close to 1 as possible. Price to cash flow. You guys know that's what I look at. Price to cash flow is hands down my most important metric. And when I see a price to cash flow at 15, but I see a PE at 20, I don't even look at the PE anymore, because price to cash flow, in my opinion, is much more important. Earnings can be manipulated. Earnings don't always, translate exactly. Now, cash flow, on the other hand, much harder to manipulate. It's just cash in versus cash out. On earnings, they can categorize things differently, and there's different write-offs, so it's harder to look at. So that's why I prefer cash flow over income or net income. Now, as far as the income statement, guys, what we'll do is we'll look at the last, 4 or 5 years of revenue growth. And as you guys can see here, back in 2016, they did about 628 million, scaling that all the way up to 4.6 billion in 2020. That is huge growth there, guys. As far as gross profit, you can see that is growing consistently as well. Like we've talked about in the Roblox video, especially, their cost of revenue was going up faster than their actual revenue, which was really bad. They are doing a very good job at keeping that and maintaining a pretty consistent cost of revenue and gross profit margin. Looks like that gross profit margin is actually even coming up, slightly. So good to see. Now, as far as net income, guys, this is really impressive here. You can see 11.8 million in net profit back in 2016, all the way up to, over a $500 million in 2020 at 636 million. Really nice to see. Now the PE ratio may not be perfect, but if they can continue to grow gross profit, net income, and keep their cost of revenue down moving forward, they'll just continue to make more and more money. They are becoming more profitable by the day. Their balance sheet is the next thing I want to look at, because that is something that is extremely healthy looking. Okay, so the one thing we want to look at here on the balance sheet, guys, is the total current assets, which is right around 4.4 billion, versus the total current liabilities, which is only 1.5 billion. So they've got more than enough cash on hand to, if they needed to liquidate everything and pay off all their debt, they could do that, 2 times over again. Very important. Next thing is the outstanding shares, guys. We want to see that going down, but it looks like they are issuing shares. Now they are a growth stock. They're not doing it too bad. You're probably getting 4 or 5%. Share dilution, but again, nothing too bad, especially when you see it at these low levels. Now, as far as cash flow goes, this is what I really, want to look at, guys. For those of you guys that do not know, cash from operations minus capital expenditures, you find it on the cash flow statement. That is how you find your free cash flow. Now, what I typically do to find a price target when I'm looking at cash flow is I'll use a price to cash flow ratio. Typically, I'll take the previous 5 years, 3 years, 4 years, whatever is showing, like if they had really low cash flow, at the 5-year mark, but at year 3 to present, it really ramped up, then I'll just use those last 3. But I'll take all 3, add them up, create a total, and then I'll divide them by whatever years I'm doing. So, get a 3-year average or a 5-year average, and then I will times that by 20 or 15 or whatever multiple I think the company deserves. That will give us our desired market cap. For example, their current market cap is around 12.5 billion. When I did the previous 4 years of their free cash flow, and I times it by 20 with the 4-year average, I was getting about 15 billion. So as far as desired market cap, so really the stock could go to about 15 billion and still be considered fair value based off of the free cash flow. Now, we're not going to use that metric today. We're going to use a discounted free cash flow model, but nonetheless, that's how I typically do it for any of you guys that are curious. But again, guys, they did have a couple down years right here as far as free cash flow right in 2020. Back in 2018, they were looking really strong because a huge jump from 2017 to 2018. And then, 1 or 2 down years, but overall, very consistent over the course of the last 4 to 5 years. And they're doing big numbers as far as free cash flow. They're averaging about 800 million in free cash flow over the course of the last 4 years. That is huge, guys. All right, guys. So last thing we're going to take a look at. So this is my simplified discounted free cash flow sheet. As you guys can see here, I put in all the valuation metrics. This is a really good way of just kind of getting a, present value of cash flow. Gives you a really nice intrinsic value per share. This is what I use quite often for my price targets. You can see I put in the most recent revenue, most recent net income, most recent free cash flow. Now, as far as the assumptions, when you have sheets like these, guys, you put in assumptions. You put in the assumptions for the growth rates, the cash flow margin, the net margin, all these different things. I was very conservative. I used exactly what they're doing today. As you can see, they're growing currently revenue at about 18%, growing net income margin sitting at about 13%, and free cash flow margin is sitting at about 17%. So as of today, I am getting an intrinsic value per share at around $16.60. That's 100% upside from current levels, guys. That price target is going to be a little bit different than doing the price to free cash flow. I think I got about a 14 when I did it that way, but $14, $16, that's still 80 to 100% upside. And I think that is absolutely on point with where I would put it. So my price target for Tencent Music would be around that $16 mark. Now, I don't know if I would say that that's going to be by the end of 2021. That's something that we'll just have to wait and see. But absolutely, within the next 12 months, I see the stock being at least $16 in value. So with that being said, guys, this is one that I am absolutely going to do a deeper dive and look at for a long-term investment. I think there's a lot of value here. If you think that they can continue to grow with these metrics, they can maintain and even grow faster. If you believe the numbers out of China, then this is absolutely a buy today at these lower levels. So, but let's go ahead and look at the chart, guys, and we'll wrap it up. Guys, the chart is what made me want to do the fundamental analysis on the first place, because it is, I mean, look at that, guys. I mean, if you take the major all-time low, you know, the previous discernible swing low, well, not all-time low, to the all-time high, you just retraced over 100% of your value. You're just about at the 113 fib extension. Now, major reversals, you know, you typically want to look for them around the 1272, 1414, 1618. But currently right now, it's not quite there. Now, that's not to say that a major reversal can't happen at these levels, guys, but it is currently in price discovery mode. There is no, you know, support resistance below these levels, so who knows how much further it can go down. I already think it looks a little undervalued, and I think it's, you know, at these levels is the most low risk entry you can take. However, there's two ways you can do it. You can either buy it on a, you know, dollar cost average strategy, adding heavier on farther dips, or you can, you know, wait and create one solid position to do more of a swing trade / position trade. If that's more your style to do a one-time entry, I would absolutely wait for a momentum shifting structure, some type of confirmation of reversal. Because right now, guys, you had that big gap down on earnings, really other than today with kind of the doji and then the bullish engulfing that hasn't even closed yet. You know, towards the end of the day, it could absolutely dump down and create a bearish, you know, candlestick. But as of right now, there's no confirmation of reversal. So you absolutely want to wait for that. Guys, when you're looking at stock charts like this that are brutally underperforming, just like we've seen on others, it creates, you know, bullish divergence at a pretty critical inflection point, and it does nothing but roll over and bleed back off. So you've got a lot of resistance overhead, guys. I don't think this is one that is going to just absolutely erupt to the upside. However, this is a quick moving stock. It is, you know, explosive at times. So what I would like to see again is some type of, you know, inverse head and shoulders, 3 rising valleys, something like that. If you're a little bit more impatient, you know, at least some type of, you know, candlestick reversal pattern like a bullish engulfing or a 3 white soldiers or something like that. You know, you're under all of your major moving averages. You know, you're back here on the RSI, you're at your lowest level of relative strength in history. I know a lot of people use it for, you know, oversold, overbought. I more so use it for, you know, divergence. But as you can see here, you've got a, you know, trend line that was manufactured clear back in January that you really have got to break. If you can't break that, you know, there's probably not going to be a lot of upside movement in the near future. Now, with that being said, guys, I think your main inflection point you've got to get back over is that 1127 to 1182. You know, you've got to get over that $12 mark. Once you can do that, you know, you've got some areas here where the stock can move pretty quickly. You know, you can see once you get up over this area, there's been times where it can run straight to the top of the range pretty quick up there around that 1428 range. But until then, guys, you're in a pretty dangerous spot. You know, you just want to see it start getting some upward, you know, momentum. Now, as far as the terminal value, right, as far as the fundamentals goes, I have no problem buying this stock on a dollar cost average and, you know, holding it for the long term, because eventually the fundamentals and the price will sync back up and they will be within, you know, fair value of each other. I think this is a very mispriced stock right here, and I think there's a lot of opportunity to the upside. Like I said, guys, our price target is right there at that $16 mark, which is all of those highs, you know, from history that has you know, happened multiple times. As you can see, guys, once you break that 16, it goes straight up. So that's really your main, you know, price target. Your first price target is the 16. After that, you know, you can kind of decide what you want to do from there. But that's it for today, guys. This video is for entertainment purposes only. I'm not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. Come join us at the Patreon if you want to be part of an amazing family. I'll see you in the next one. Peace.